Welcome to today's live ASX strategy session. Great to have you with me. Lots of interesting things to go through today. We've got the ASX 200. Of course, we're going to then go through all the commodities. We've got the gold, copper, oil, uranium, some interesting things happening across that group. And I've got a couple of really interesting stocks that I want to talk to you about today. So yeah, I think we're shaping up for a really interesting show. As always, everything today is general commentary only, doesn't take your personal situation into account. Having said all that, I think we should just get straight into our charts. The ASX 200 is really, I think this is a really interesting point where the market currently is. So is this going to be the top of the range, which then leads to a pullback into the range, back towards the middle or even the lower end of the range? Or are we about to see a series of new all-time highs develop? And really, I think it could go either way. I'm going to go through a few charts to help answer this in a moment, and also talk about the strategy for playing the current situation. But first of all, I want to tidy up this chart a little bit. And this is something you should always be thinking about with your own charts. When you're keeping your charts and you save them, you save the lines, supports, resistance, everything you have on it. You should always be looking to declutter them over time. So when something is no longer serves a purpose, get rid of it. And what I'm going to get rid of today, I'm going to get rid of this big support resistance, which I've had on the chart for so long, and it was really useful when the market was trading back below these previous highs. But what I've found in the last few months, it's not really as effective as it has been previously, particularly over that pullback in April, the market just moving either side of it. So when something's no longer serving a good purpose, take it out, because having clutter on your chart can also just take your attention away from new features that are developing. So we've lost that line for now, and we can put in new things as time goes on. Now, two key features on this chart. We have the March high and the April low. I think they're our two main reference points. And they really do firm up the range that the ASX 200 has been trading in over the last couple of months. And we can also add in a short-term support. So I'm just going to sketch that in now. So I'm just using this previous low from April. I'm using the high from April. I'm using a low from May. So we can just put a little block of support through that region there. It comes in at around 7,720. Also coincides with where the 50-day moving average is. So that may be something which becomes useful over the next 1, 2, 3 weeks, perhaps. We'll see. Got to see how that price action develops. But we know that's there. If the market were to pull back and were to hold that level, that would be a good positive thing, which could then set a springboard up for a move higher. So let's see whether that comes into play or not. And my view it's really been a case that the overall trend from October has been up, and it's been also that a longer consolidation was likely. So as we've talked about before, 5-month advance, relatively short pullback. So my view has been that a longer consolidation, maybe another month or two or so, would then give some proportion to the pullback compared to the previous rally, and then maybe you look for new gains from there. So that's been the view. And while the ASX 200, it's remained below that March high, and it still remains below the March high. I've still got that leaning towards that longer consolidation. But I'm also open to the possibility that prices run now. And so I'll look at what's going on in the US markets and try to tie a few things in together. And that is a possibility. It is a possibility that we do get a series of highs developing from current levels. So being open to that possibility. As it stands, we have a market that's pulled back from we've got a market that's pulled back to these moving averages. It's rallied. that's a classic bullish price action that I like to look for. And we also want to see that accumulation on dips, the buy the dip type of, as we commonly refer to it as. We've seen all that happen, and then we've rallied off those moving averages, and that's what we currently have. And from there, I think we could see further gains um, develop from here. Also, just looking at the price action over the last week, we just had this narrow consolidation and then a break from there. So all that I think is positive, and it does open that possibility that the ASX 200 does continue to push higher. That's why I say being open to that potential for that to happen from now. A couple of things that have me thinking that this could still pause, that the market could still pause before rallying. So I just go through them. First thing, I've been looking at the financial ASX 200 financial ETF. So this is the beta shares ASX 200 financial ETF. This was really helpful around the October low, as being one of the leaders out of that corrective period that we had in the market. So when this shifted from below the moving averages to above, we spoke about this at the time during November. And then we got a breakout above this downward trend line, and then this really all then flowed through into the ASX 200. We got that strong period that we've had. What we've been seeing in this over the last few months, consolidation, correction, like we've had in the ASX 200. Really nice rally off the 100-day moving average. Where we find ourselves now, is you can just draw a little bit of a resistance point across there from that previous high, from that March high. Prices have just gotten up to there. Do they stall here and pull back again towards the 50-day moving average? Is that one of those? Could that occur, and could that then flow through to a longer consolidation in the ASX 200? So I think that's still very much on the table as a possibility. Short-term double top, maybe a modest pullback. I think the trend is very much up, but I think there's room for that further consolidation. Also consolidation of this rally from the April low, which has been a strong rally. Another thing I'm watching is, so that's one reason why I think we could see further pause in the ASX 200. I'm also watching the ASX 200 equal weight. So just having a look at that. And what we see when we look at this, it hasn't been as strong over the last couple of weeks as the ASX 200, much like we've been seeing in the US. So I've done the US video, which have a look at that as well. They go through how the equal weight ETFs are performing in the US. And I think a sustained rally in the ASX 200 really needs broad participation, and the equal weight just doesn't look like it's quite ready to go yet. It looks like maybe it could again pull back to this 50-day moving average. I think the strategy here is twofold. So this is a strategy. I think firstly, it's about minimizing risk. I always talk about minimizing risk. Risk is one of the most important things we can consider. Actually, it's the most important thing. If you lose your capital, you can no longer be involved. So we're always looking to manage and minimize risk. I'm doing that through wide trailing stops. I talk about them all the time. I think there's such an effective strategy for staying on trends and managing risk for when a market pulls back, when it pulls back too far. And by using those wide trailing stops, if the ASX 200 does stay within this range, if we do stay within a ranging period, those wide stops help us sit through that period until potentially the market is ready to run. If it does run now, if we do get that sequence of higher highs develop, then I'm still holding a large portfolio of stocks. And I'm also covered if what I think the least likely scenario that we do get a big breakdown and the market falls. I think that's the least of the three scenarios. But if that were to happen, well, I'm covered for that as well because I've got exit points. So that's how I think that's the first part of managing our current situation, wide trailing stops. The second part, But the plan involves what? Buying, when to buy. And I want to buy stocks that are breaking out of ranges and rallying off their moving averages. So like we have here, rallying off their moving averages, that presents those asymmetric entry opportunities. And this is where I think the risk reward is best. I want to trade with momentum. I want to use a stop loss in the event the momentum stalls and a stock comes back. And I've got a couple of examples for you, a couple of really nice current examples where we've got stocks which are rallying off moving averages. I'm going to come back to them a little bit later. And these are the sort of asymmetric opportunities that I like to look for. And when I talk about asymmetric, it's where your risk is relatively small compared to your potential upside. And going with momentum, really important things to have all those things in place. Now, if you're getting some value from this, please hit that like button, leave a short comment, just, hey, thanks for the video, just tells YouTube you're watching, you're engaging. YouTube shows other people, helps me heaps. Please do those things. And now I'm going to move on to those two stocks in a moment. I've got the Small Ords, the emerging companies, I've got the commodities, lots of stuff to talk about there. But of course, that wraps up the free section. If you're not a strategy session member, click the link below, come and join me. Cost you very little, and just these two stocks I'm going to talk about could pay for this for a couple of years. So if they work out, not everything works out, of course, but think about coming across. The people who are with me tell me it's great value, so hopefully you'd think so too. Okay, let's move over. Let's do the small ordinaries.